Alrighty, ladies and gentlemen, apologies that we're late today. There's a little bit of weather issues here. Got a couple of feet of snow. Had the vehicle stuck, but we're back now, and we are going to get SPDas on the line here for Sydney, Tokyo. Brand new trading week. And without further ado, let's get started. SPDas, the trading floor is yours.
All right, thank you, Igor, and good morning and welcome back to the Tokyo Sydney overlap. It is 17th of Feb on the eastern side and 16th evening on the western side now. So let's get started off straight away. I think Friday late news went in gold, which we can start with gold, and I think the short positions which were taken can be moved into some kind of profits actually. So let's get started with gold, and this was the 4 hour time frame which we have been following, and if it's beginning to cut loose on the south side now, then we are in for a major decline towards 2500 soon, and it's still early to conclude we are moving, but 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 at least the first step has been taken right now, at least on Friday when gold declined almost 60 points. Before coming back to the recent structure, let me bring up the daily chart as well. I need to just hide this, not to be seen on the daily chart. Okay, it's not seen on the daily chart. Okay, fine. Let's move on to the daily chart first. We'll do the preferred count and then the alternate count first. Preferred count first and then the alternate count. Sorry. And we've got wave 1, 2, 3, potential wave 4 up there. It's still in the works. And then 5. That is a minor degree. Let's keep the bigger picture in mind, bigger targets, larger targets in mind as well. Because we still have wave 5 left to be carved. And if the fifth wave is progressing right now, then the upside targets for the fifth wave is around 3192 or 3200 easily. All right. Now, continuing with the preferred wave count, what we are seeing on the chart right now is a potential expanded flat ABC. It could be unfolding right now. And that is a minute degree. All right. As I said, it is a bit early to conclude that wave C for the minute degree is now underway. But if it is underway, then we are now looking to a five-wave decline from the top. That is wave 3 possibly, wave 4 and then 5. Okay, this is a high probable wave count which we have presented. Now we kind of proposed a short entry last week in gold, which has probably earned profits at least for now. So it is suggested to kindly take the profits out of the desk and remain flat for now. We will wait for a pullback and re-enter on the short side again. All right, it's requested to please book profits in gold and stay on the sidelines for now. We will again enter on a pullback. The reason being, now let's go on an hourly chart, but before that, the alternate count. Let's also discuss the alternate count. For example, for let's presume that the fourth wave completed here as a triangle, and then the fifth wave is already progressing. If that is the case, then the alternate count would be we are just in a corrective wave 4 right now, which is either expanding, either working as a flat or an expanded flat. I think it's working as a flat in that case. In that case, if the alternate count is coming up to be correct, then you will see a print below 28, 60, 62, 65, and that will be hit, and the right those will be back at control. So that's one of the reasons why we don't want to keep our positions open for too long. That could be one more low, and the alternate count is correct or it's coming out or be true, then we should be a bit careful, right? So let's say thank you very much right now for the short term because we are seeing much lower levels on the RSI, and there would be a divergence with one more low in place or one more low still to be in place. We'll try and look around at that point where whether we want to go aggressive counter trend longs or not. At least for now, let's remain flat. Let's book profits and stay on the sidelines, please. We will be bringing up the next story in the London session where price action will be doing something interesting on the daily chart. But one thing is good, which we can see right now, is on the candlestick charts, there is an engulfing bearish, sorry, which is a good way to begin or good way to tell a story that, okay, fine. See, it has taken a cup, that pattern has unfolded nicely. You remember that was a shooting star, which we were talking about, potential evening star thereafter, which did not take place, but it went up to two more sessions, and the third session it almost tested. I mean, just a couple of dollars left, and we were discussing, I think, on Friday that if it has to turn, it has to turn now. 29.42 cannot be breached if it has to reverse. That's exactly what happened in the New York Times, and what we are seeing right now is a perfect engulfing bearish. So whether this bearish engulfing candle is going to hold or not, high probable chances are there, probabilities are there that we are now turning lower, at least for maybe the next few weeks, right? So gold is going to be quite a bit weaker. That's what it indicates on the charts right now. All right. Okay, let's touch base with euro, dollar index, and pound now. We've got the larger degree move. On the higher side, 5 waves followed by a corrective ABC decline that goes. We've been following through since the 1st of Jan. 13th of January, the story says that, okay, it was just about the beginning to cut loose on the north side. And come 17th of Feb now, we have quite a few waves in our hand, but it's still too early to say whether we are done with the second wave or not. Because wave two, just before the rally resumes, or just before the third wave could resume, it could take some more sideways action. Okay, so let's be prepared for that. And we are absolutely flat right now in terms of not completely, but partial profits were always recommended. So only maybe 20% of long positions are still on. Now, looking at the 4 hour chart or an hourly chart, a high probable move looks like a decline in store might be coming, if not now as we speak, but very soon it is quite possible for a corrective drop before the next rally could actually begin. And that one would be the third wave of a supreme high level intensity, all right, which could actually drag prices or push prices higher towards the 750 and 1000 and 1100 levels going forward. Right now, preferred wave count obviously is 5 up at a lower degree, 3 down at a lower degree. So we've got minute wave 1 and 2 in place. It is quite possible that the third wave is underway, but we are also keeping ourselves open with an alternate count of an ABC, another ABC, and maybe 5 waves lower. That entire move would then be termed as a WXY or a running flat or a triangle in the making if there are 5 waves move. So let's be prepared for a corrective dip, which is going to give us or which would give us another entry point around 1.0370 uh, or 5070 kind of a level, right? Trading point of that's the wave story. The larger degree daily chart indicates the trend is turning higher against 1.0177. The smaller degree waves are also telling the trend is already turned higher against 1.0177. Maybe there could be a corrective decline, and that might provide us yet another opportunity to go on the long side. All right. So, trading point of view, please hold on to your long positions. Possibly partial profits could have been booked around 500. There could be one more push higher towards 520-30 zone before the corrective move could resume. So be prepared for an entry around the 370 or 350 zone, and that is what the RSI is also pointing. Maybe there might be one more high, one more shallow high around the 520s or 530s, while the RSI shows a diverging scenario here. But we need to see this RSI dropping lower towards 30 before the third wave actually resumes, right? But we've got to remain on the long side, please. So that is the story in the euro. We go back to the dollar index. Large degree trend is 5 waves on the downside. That means it's a downtrend, which was implied a couple of years back. All right, July 2023, it was confirmed that dollar index is that move is incomplete. It has taken a couple of years again for a sideways ABC to complete, which is right at the 61.8%, just about higher than 61.8% retracement. So the next move, believe it or not, is on the north side, sorry, south side from now against 110.20. So we have kept our stop losses around 110.30. Now the action lies over here. It is three up, which is wave two complete. First of all, it is five down. So lower degree wave one is in place, followed by a three up corrective rally, ABC. So potentially wave two is also in place, and probably we are unfolding into third wave right now. We have just begun to unfold into third wave right now. All right. This is the preferred wave count, obviously. Alternate count, so that we are not surprised if it does so, is that we've got a three up and then we've got a three down as well. This is a 5-3-5 structure as well. And if it is a three up followed by three down, then sir, there will be, or there could be another series of three waves up or a five waves up. If it is a three wave up, then the entire structure would become a combination called WXY. If there is five wave ups, the entire structure would be a running flat. If there are a couple of three more waves, three up and three down, and three up, it becomes a triangle. So we've got three options which we should ideally keep our minds open or counts open so that we're not really surprised. All right, that's the wave story. Larger degree trend is absolutely no doubt. We are going much lower back to uh, two figures actually. We are three figures right now. 108. We should be in two figures in the next few weeks or next coming few weeks. All right, and a potential target for those who want to position themselves, it could be quite useful as export tool as well, where you are exporting some services and you want to position yourself on the hedge side of your expected revenues, then dollar index is actually positioning poised to drop towards 93 and even 89 going forward. All right, so positioning is really important for even exporters who are expecting dollar inflows, correct? So it's it's quite a beautiful story being called out on the daily chart that we are moving into two figures going forward. So keeping in mind 93, selling on rallies is absolutely on cards. It is also advisable not to book complete profits. Keep some positions on the shorts intact and add on rallies. Now, trading point of view, we will get an opportunity or we should get an opportunity either this week or probably this week or next week, but we need to see the pullback coming in first. Around it could be 10. I would count this area as a good resistance zone. It starts from the 108 and extends through 109 always. That 100-point range, we would take it as a potential short entry again. All right. So that is the story in the dollar index. We've done gold. We can pick up pound again quickly, 1 hour chart. Okay. The larger degree, again, let's touch base the larger degree first. That is 1, 2, 3, 4, 5, followed by an ABC. whether that's an ABC simple or it's a complex, but it's a corrective wave, ABC, which is just barely completing around 38.2% of the earlier wave. So I would put into a category of a running flag possibly, but it's not a very simple ABC. It's a 3-3-3 kind of a pattern, which ideally should be labeled as WXY for simplicity. It's okay that we are doing ABC, but ideally it is it's a combination actually. Nonetheless, what we are more interested is what is happening on the right hand side, like the larger degree trend being turned down. The lower degree trend is also indicating a turn. Larger degree trend is turning up. Sorry, the lower degree trends are also pointing towards the same, where we've got the first impulse 1, 2, 3, 4, 5, followed by an ABC. The structure could be slightly different than the euro and the dollar index in pound, but we are still waiting for a corrected decline. The third wave is underway now. Corrective decline could bring prices towards 24.50 again before prices can really shoot out on the north side. If it doesn't, trading point of view, we are always at least partial shorts, partial longs in the equity we are always holding. We're suggested to hold at least. So please remain at least partial long with the stop around 20 to 50. For those who are wanting to enter, it's not the right price. And if you still want to enter at this price, which is around 25.86, 85 now, remember our first target is 28, which is almost a couple of hundred points, not more than that now. So it's not the technically it won't be the right place to enter on the long side at this price. But if you still do, stop loss would go at 22.50, not below that, not higher than that. Sorry. All right. So pound is on the long side again. No change there. I think we've got some interesting moves being made by Bitcoin. We had issued a long on Saturday, and this is what could be probably happening in Bitcoin right now. So I think it's a triangle in the making, and probably the triangle is very close to completion. So ideally, this is a place where longs could be built again. Remember, we booked profits on Friday, and we were on the sidelines. And once again, there is an opportunity to go on the long side around the 96,000 mark. Stop loss ideally would go around below 91 at least, but I would suggest 89 would be very safe. Sometimes triangles do penetrate the C wave as well, but if they penetrate A, then it's an invalid triangle. It's no more a triangle, right? So ideally the stop should be around 89, with longs around 96, 200, 300, and take profits around 115, 123. There's no change in the take profits at all. All right. So long in Bitcoins, and we'll touch base with other coins as well in the London Times. So let's bring it a pause right now with major trends being discussed. We'll be back again in a few hours during the London Times. Once again, thank you for your time. Thank you for joining. And until the next one, happy trading and good luck. Back to you, Igor. Thank you.
SPDas, it's always a pleasure. Thank you very much.
Thank you.